Welcome to the Power Ambition podcast. This is your host, Nicole Serrato. Today, I'm going to be talking about my 10-year career in finance and what I learned from buying a rental property in Florida. Now, let's get into it. So it's always been a dream of mine to own rental property. Since I was 11 years old, I was obsessed with real estate, oddly enough. I'm not in finance anymore. I am a filmmaker, an actress, writer, director, and producer, but I'm still fascinated with real estate, and it's something that I'm still super passionate about. If you're old enough to remember when the penny saver used to come to our house, for those of you who don't, it's essentially Craigslist that comes to your house on a weekly basis in a small little paper pamphlet. So I used to look at the penny saver relentlessly. I would always look at properties, and I even still remember some of the numbers at the time. It was like $178,000, and payment would be $800 something, $900 a month. So that being said, it was a dream of mine to own property. So I decided when I had enough money saved that I was going to buy a rental property. Now, of all places, I decided to buy my rental property in Florida. Now, mind you, at the time, my nieces lived out there. I wanted to, my brother was planning to move out there. I was like, oh, this is great. The properties in Florida are much more affordable than LA. I'll buy a rental property out in Florida. My brother will move out there and I'll rent it and get some rental income from it. And I'll have my first rental property. I was super excited about it. But there was definitely some pros and cons to that purchase. And I just want to share with you what I learned, how I found the property. I do have a spreadsheet now. I'm not licensed in finance, but I do consult here and there on rental properties. I do have a spreadsheet that helps calculate what the potential income would be from a rental property. And I do have, some friends who are real estate agents. I have some friends who own properties. So I'm going to be working on getting them onto the podcast so they can talk about further what their process was like when buying a property. So the property that I purchased in Florida, I don't have the exact numbers right now, but I bought it for I think it was 140 something thousand. It was a 3-unit property, 2-bedroom, 1 bathroom in the front, one bedroom, 1 bathroom in the middle, and there was a studio all the way in the back. And after the mortgage and after utilities, after expenses, I was receiving a gross of about $1,200 a month. Now, what did I learn? What mistakes did I make? Because I think that the best way to learn from mistakes is to learn from other people's mistakes, aka mine. So that being said, I would get into the nitty gritty of it. Buying the property in Florida was overall not the best decision I've made, but it was definitely a learning decision. And thankfully, I didn't actually lose money on that investment. So thinking, I want to say that the number one thing, if you're deciding to buy a state because, prices out of state can be a little bit cheaper, the best thing to do is before considering purchasing a property out of state, step number 1 would be to find a great property manager. Someone that can help with the tenant, someone that can contract people to come work on your property so you don't have to fly out to take care of anything yourself necessarily, which, flying out can increase the cost of that property quite drastically and put you in the negative of profit. And so my mistake when I first bought the property is I thought oh, how hard is collecting rent? This is going to be easy. I'm just going to buy a property. I'll just collect their rent, pay my expenses and collect this rental income. Well, it was more difficult than that. These tenants were calling me all the time for almost nonsense, sometimes to just call me just because there wasn't even anything that they necessarily needed. So I'd get calls after call, and it was just extremely stressful to deal with, especially because at the time I was still working in finance. So I had a full-time job, and that's around the time I started modeling and working in the entertainment industry. So I had a full-time job on modeling and acting. And then I'm getting these calls from tenants at 1 in the morning or 2 in the morning because my property's in Florida. I'm in California. It's East Coast time versus West Coast time. So thankfully, I was lucky and I found a really, really good property manager. Whenever look for professionals, I find that if you look at Yelp and look all these things, and you look up reviews, it's a good tactic. But there's something else called Thumbtack, which is a network of professionals where you go and you list the service you need, and you have all these professionals bidding for your business. It allows you to look into the business further. You can look them up on Yelp after. And I vetted about 10 property managers in Florida, and I found one, Benjamin, who turned out to be absolutely amazing. Like, he just completely took all the burden off of that property for me. And I can't imagine if I had not found Ben and I found someone who was mediocre, who wasn't as great as a property manager, what my experience would have been like. But Ben made it a really, really amazing experience. So the first things first is, if you're planning to buy a property out of state, or even if you're planning to buy the property in state, a property manager typically takes like 5 to 10% of the income that the property is generating. And in my opinion, paying that 5 to 10% to a property manager just really frees up your time and allows you to build some passive income. So it's a really great investment. So before you consider buying a property, vet some property managers, know who you're already going to use, ask for referrals, read reviews, and lock that in before you even buy the property. That's something that I definitely plan on doing on my next purchase of a rental property, because I learned that in the past. Second thing that I learned when buying a property is make sure you do not buy a property that has some permit issues unless you can afford to get the permits or fix whatever regulation is being broken by the current owner. The property I bought in Florida, as I said, it was a 3-unit property. To my knowledge, according to the state, it was technically a single family home, which was broken up into 2 units. The single home that was connected, it was broken up into, it was originally a 3-bedroom, 2-bath, but it was broken up into a 2-bedroom, 1-bath, and then 1-bedroom, 1-bath in the back. And then the studio in the back was originally not permitted. Like, they didn't take any permits out. 2 years after I purchased the property, the city came and fined me for not having a permitted dwelling on my property, which then I had to go through the process of removing that dwelling, removing the tenant, and then trying to get that permitted. Unfortunately, by the time I was fined for that, I had already quit my finance job and I was in school, film school full time in New York, and I just couldn't handle the financial burden and the time that I would have needed to take to go down to Florida, to pull the permits, to rebuild, this back studio. I'm permitted as a duplex, triplex. So if you're buying a triplex or a duplex or some sort of unit, make sure that there aren't any permitting issues. This was brought up during the sale. They have surveys, they have inspections and things like that. And I remember the inspector came and he was like, hey, this second unit has a fridge and a stove and we need to remove it so we can pass your inspection. And I didn't comprehend at the time that what that meant was that unit was not permitted as a second apartment. I was like, okay, cool. Just move the fridge and the stove out and then sell me the property so I can make some income, because it was a decent amount of income. And I was just not knowledgeable on that. Like, one might say like, oh, well, that's common sense. Like, if he asked you to move something, but at the time it wasn't. And it's just, there's certain questions that to ask after experiencing not asking the right questions. So if there's any weird kind of like, oh, you have to remove this stove or you have to remove this fridge from this unit so inspection can pass, know that there's some sort of permitting issue that you should probably ask about, because you don't want to be receiving $1,000 or $2,000 in rental income, and then you get fined and the tenant has to move, and now your income's dropped, or worse, you have to start paying out of pocket to cover that expense. So that's definitely something to look out for, and that's also a learning lesson. Third thing is make sure if you're buying out of state, you have a reliable handyman or someone in construction that you can hire who's not going to overcharge you for services. And that goes for the same if you're buying a property in the same state where you live. You may know someone who does construction that you trust their word, but it's good to have someone handy, someone that you can go to, because what I found is, when I needed something done on the property and I would call around to get quotes before I had my property manager, the quotes I would get were like 3-4 times higher than what I expected to pay. And after doing some thorough research, I realized that because I was an out-of-state owner, people were trying to take advantage of that because the cost in Florida was much lower, in regards to like repairs and things of that nature. But because they're higher in California, they were trying to charge me California prices when their prices in Florida were much lower. So luckily, I am a bargain shopper, so I'm always shopping around for the best deal without sacrificing quality. And so I was able to tell like that, I didn't have someone. And so I found myself flying out to Florida a couple of times to handle things on my own because it was going to be cheaper for me to buy a ticket and fly out to Florida versus having someone do it there. So that's something definitely to take into consideration because, when you buy a rental property, you want to make sure you have some sort of, financial backing. So if the plumbing goes or if the roof needs fixing or just anything can happen with the property. And, sometimes there can be this fantasy of like, oh, if I buy this property, I'm just going to own this property. I'm going to receive all this rental income. It's like, yes, but just know repairs happen and you're responsible. And so make sure you have a little nest egg aside and make sure you have a handyman or someone who does construction whom you trust and is not going to overcharge you. Another thing to take into consideration, and this is something that I learned because of experience, when I sold mortgages in, back in 2008, 2009, during the financial crash, I sold mortgages in California. And in California, I don't know if this is still law today. Just for disclosure, I am not currently licensed by the state of California. I cannot give any financial advice. I'm just simply giving my opinion and what my experience was on buying properties, and every sentence and all the information I'm giving on this video is simply my opinion. I'm not a licensed mortgage loan officer or anything of that sort anymore. But based on my experience in California, and to my knowledge, you do not pay an increase of taxes unless you refinance or sell a home. My mistake with buying my property in Florida is Florida laws are different. You pay taxes based on your property value every year. So if next year your property value increases, you will pay increased taxes that following year on the new value. Now, this was back in 2017, so it's probable that the laws changed or the policy changed, but back then, my taxes increased. It was an unseen expense because the value of my property increased, the taxes increased. But in California, your taxes don't increase on the property until you refinance or sell. And I did neither. So I was so confused. I should have been saving more of the profit per month, or at least had a little bit more of a nest egg to cover that. So unfortunately, that was a learning lesson. So if you are buying another state, make sure you look up the laws. Make sure you know the differences of, increased taxes and the regulations and things of that nature. So that was definitely a really big surprise for me that I was not aware of. Now, if you're in California, which the most of my friends and my family are in California, we are not necessarily familiar with septic tanks. Florida is. What is a septic tank? It's something that instead of your typical plumbing, when you flush the toilet and, all that stuff goes down into like a sewer, a septic tank is Florida, where means that all of it goes into this big tank that's on the property underneath the house. Yes. And that has to be serviced and has to be serviced. Okay. There has to be some sort of maintenance, and that has to be emptied. I believe, I don't recall, I think it was once a year or something, but that septic tank has to be emptied. So when I first bought my Florida property and they're like, hey, your a month into owning the property, like, hey, your septic tank needs to be emptied. I was like, what's a septic tank? And they explained it. I was like, oh, okay. How much is that going to cost me? $1,000. Oh, also the septic tank was kind of not installed properly. So there's some repairs. So how much is that going to cost me? Oh, so again, if you're buying in a different state, if you're buying the same state, there's just, depending what area, there's just all these questions that you want to ask. And so the whole septic tank, and it was just so new. So it is definitely something to keep into consideration is, my real estate agent wasn't asking these questions. She was a fairly new agent at the time, which I was not aware of. And nothing against new agents. I think, every agent has to pass the test and has a state license. But it's good to ask these type of questions and ask your agents, is there anything else I should be asking? What else should I know about this property before purchasing it? Because you want to try to, especially if you're buying this property with anticipation of like creating some passive income, you want to make sure that that passive income is not interrupted by unforeseen expenses. That if you could prepare a plan for those, then you could potentially continue to make that income. And lastly, I want to say, when I bought this property, my intention was to buy multiple properties after that. I wanted to have like 5 to 10 properties. But I wasn't necessarily in the position to do so. Like I purchased it right before quitting finance, right before going back to school full time. It probably wasn't the best time to buy the property in my life. And so I kind of wish I would have waited or bought a property that was a little bit less risque because of the situation that I was in. I was a full-time student, and it was a little bit difficult to manage from across the country. So if it was in the same city, it might have been a little bit easier for me to hold on to that property. So when buying rental properties or trying to build your portfolio, it is important that you take into consideration your life circumstance and the time, that you have to invest. Even if it's just talking to your property manager or if it's making sure you have enough savings to cover any type of repairs that might happen. Last thing I want to say is, fortunately, even though there were some pros and cons to buying that rental property in Florida, there was definitely some life lessons learned. I ended up, selling the property with a profit. And so that was great. But one thing that I think people make a mistake when they're looking for properties is they're not looking at the passive income. They're looking at like, oh, what's the lowest price property I can get? Or the market's, right now the market's kind of bubbled in my opinion. And so they're like, oh, well, it's bubbled right now. Like maybe I should wait till it drops. Maybe you should. I don't know. I can't give you financial advice particularly. But the most important thing when you're looking at a property is, and this is something I talk about a lot, is properties are actually more affordable than you think. So if you pay rent in whatever city you live in, most likely the rent that you're paying per month is almost comparable to the payment of a condo, a townhouse, or some property in the area. So why do I bring a townhouse or a condo up? I bring that up specifically because of Los Angeles. If you live in LA, you're paying pretty high rent. There's a condo or a townhouse near your neighborhood that's comparable in payment to your rent. Now, what would be the benefit to putting down 3.5% into a condo and renting out a condo? Here's my theory. You're going to build equity to help you buy the next property. So let's say you're living in a 2-bedroom, 2-bathroom, high luxury apartment building with your best friend. And you each are paying between $1,600 to $1,700 a month. If you bought a 2-bedroom, 1-bathroom, or 2-bedroom, 2-bathroom condo or townhouse, you found something for like, let's say $400,000, okay? Let's just throw it. You can find a condo or townhouse in LA for between $395,000 and $500,000. Okay, you're looking at a payment, depending what the interest rate is, roughly between $2,400 and $3,400. So if you buy a 2-bedroom, 2-bathroom condo and you charge half of your mortgage to a roommate, you're basically paying rent to yourself. You're paying the same amount that you would pay in rent. Your roommate is paying the same amount that they would have paid at anywhere else in rent in a high, nice luxury building. And you're building equity. The price of that condo or townhouse is, some people live in LA for 7, 8, 10 years, just renting. And yeah, they're like, a lot of business moguls say like, oh, well, don't buy right now. Like it's better to, if you're going to buy a rental property, buying a real estate's not the best investment. And that's true in some aspects. But in this, if you calculate that you're going to be building equity, charging someone else rent, paying the same amount that you would have paid to a landlord, and let's say in 10 years after you live in LA owning that condo, you're going to build equity. And then you'll be able to sell that, and whatever amount that you get that with, let's say you decide to buy a rental property, let's say you end up buying a single family home, whatever it may be, you're actually building equity. And you're paying the same amount of money that you would have been paying while renting. So that's just something to take into consideration. Buying a house or buying property is more affordable than you think. And I encourage you, use all the platforms, Redfin, Zillow. I don't know what those are the two main ones that I use. I don't know what other ones are out there. But start looking into it. Start trying to educate yourself financially. If you want to be a business owner, if you want to build passive income through rental properties, or maybe you just want to own a house, it's totally fine as well. Look at the numbers. Go into your city, put in your zip code, and just check what are the prices of homes around you. What are the prices of condos around you? What are the prices of the land around you? You'll be surprised on how much land is for sale that is affordable. I found a piece of land the other day that costs less than my car payment. Financial literacy is talked about a lot more now than it ever has been, and I'm so happy about that. Because if I didn't work in finance for the first 10 years of my 20s, I wouldn't know as much as I know now. Now, does that mean I listened to everything? No, sometimes you don't listen to your own advice. I've definitely, haven't taken my own advice here and there. I'm not saying I'm perfect. I'm not saying I implemented all these things. Yes, I've owned property. Yes, I've been a landlord. I made money from that sale. I made mistakes. I learned from those mistakes. And I just want to share that with you because I think the best way to learn is from other people's mistakes. And so I want you to learn from my mistakes, like I learned from my mistakes, and just share a little bit of that knowledge with you today. Going into something next is when I worked in mortgages, I want to demystify. Oh my God, this microphone is so far from me. No wonder. Wow. Qué tontería. Yo tenía el micrófono aquí, pero debía tener aquí. Yo tenía aquí, pero yo necesito aquí. Y ahora me puedes escuchar. Ay, Dios. Okay. I'm a newbie at podcasting. I will get better. I promise. With that being said, I want to demystify the process of qualifying for a loan. Because there's a few things that people don't necessarily talk about. And I don't know if it's on purpose or if there's articles out there on this, but I know when I have these conversations about demystifying applying for a loan, how you actually qualify for a loan, what banks look at, and what mortgage underwriters look at. An underwriter is someone that reviews your paperwork and determines on whether or not you qualify for a loan. So I'll take you through the first process. So the first thing that a bank looks at is they pull your credit. Now, some people say, I've have credit cards. I make my payments on time all the time. My credit score is like 800. I'm not sure why I got this super high interest rate or I got declined for this loan. Well, just because you have an 800 credit score doesn't mean you have strong credit. What does that even mean? In the finance industry, when we're working on the approval side, there's such thing as called a thin credit file. I had several clients get declined because they had an 800 credit score, but they had a thin credit file. They had 2 department store credit cards, one JCPenney's, one Sears. I'm just making this up. They had one JCPenney's, one Sears, and they made their payments for the last 10 years on time. But that's all they have. They don't have a diverse portfolio showing that they're able to pay off bigger debt loads. The bank wants to see that you can pay off a $40,000 installment loan. They want to see that you can pay off a student loan. They need a diversity of the types of credit. Am I telling you to get into debt? No, I'm not telling you to get into debt. One time I bought a car and I bought it for I don't remember what I bought it for. I think like 10 grand or something. And I had the car for like 3 months and I was like, I have the 10 grand. I'm just going to pay it off. So then I paid it off and my score dropped. And I was like, what the heck? Why did my score drop? And the credit bureaus, and my friend who's an underwriter was like, it dropped because you bought a $10,000 car, but you didn't show that you could make 12 months of on-time payments. You paid it off. Does that look good? It looks good that you paid it off, but it's not going to increase your score because they want to see consistent on-time payments. That's how the bank knows that you can actually make a payment. Again, I'm not saying get into debt, but I'm saying diversify your debt. If you are going to finance something, diversify. If you need credit to purchase a property and you don't have cash, you're going to need a diversified credit portfolio. Number 1, I have a diversified portfolio. And I've made all my payments on time for years. Why is my score in the low 600s? I don't understand. Well, there's another thing called utilization. Utilization of the credit available to you is another factor that underwriters look at. Now, I'll use an example. If your credit card payment is due on the first of every month, and they calculate your loan on the first of every month, which means they recalculate how much you owe and they report to the credit bureau what that amount is. Now, let's say you're trying to be early. So you're like, I pay off my credit card every month on the 20th. So on the 20th every month, I pay it off completely. So I should have great credit. But let's say between the 20th that you pay off that card and the 1st, you charge again. And you have a $1,000 credit card and let's say you charge $700 before they recalculate your loan. The credit card company is going to report to the credit bureau the current balance. And the current balance represents your utilization. So if your utilization is $750 of $1,000, you have high. You're using 75% of available credit to you. It will automatically lower your score. Your utilization, if you're trying to pump up your score, should stay under 30%. So if you are that person that pays off your credit cards every month, amazing. Pay it off, right? Have an automatic payment. Make sure that it posts to your account. Make sure that the credit card company is posting a 0 balance until you use it again. Don't use the credit card until the credit card company has already posted that your balance is 0. That will always keep your utilization at 0, which automatically boosts your score. Now, let's say you need to use that credit. Don't freak out if your score drops down to 620 from a 700 because of your utilization. Your credit score will pick right back up once you lower that utilization. So, number 1, the diversity of credit. Number 2, utilization of credit. It matters, okay? It matters when your credit card company calculates your balance. And it's easy to find. You can either call the bank or you can look at your statement. It shows on there the day that they process and recalculate your loan. Third thing when it comes to credit history. If you're constantly taking out new credit cards or if you're constantly taking out new debt, you can definitely have too big of a credit profile. And whenever you take out a new debt or a new credit card, what you're doing is you're lowering the average of the history of your debt. So let's say you have a few credit cards you've had for 10 years, then you have a car loan for 6 years, and then you take out 2 new credit cards just because. That shortens your average history. And your average history is calculated based on all of your debt. And if you have below an average history of 3 to 4 years, then that can hinder you qualifying for a loan, or that can cause the bank to give you a higher interest rate. So those are just some small things to look out for. If you don't have any credit, a great way to build credit is by getting a secured credit card. If you don't know what that is, I've included links in this bio so you can look that up. But those are just a few things that I've learned in finance. I learned, about, buying a rental property and all the things the pros and cons of buying a rental property in a different state and all the questions that you need to learn. And then when processing mortgages, I learned kind of the behind the scenes of like why credit scores fluctuate and what causes them to fluctuate, and why you get denied or why you get a high interest rate offer when you think like, oh, I've paid my credit cards on time, like I shouldn't have this high interest rate. There's so many factors that go into it. And an hour or 30-minute podcast is, I'm not going to be able to cover it all. I'm just not. And maybe if any of you have questions, you can put questions in the comments. And if you want me to cover this topic again, I will. Once more, I worked in finance for 10 years. The first 6 years of that finance career, I sold mortgages and I sold life insurance. And the last 4 years of that 10-year career, I sold medical loans and I sold business loans, which I worked a little bit closer with the underwriters when I sold business and medical loans. So again, if you have any questions about finance, about credit, about buying property, about mortgages, which I didn't get to cover as much as on mortgages that I wanted to cover, which I'll definitely have to do a segment on that next because it's a whole other topic. I just wanted to share with you like the knowledge I learned from finance. And I'm so grateful for that career because it wasn't my initial career. Like I wanted to be a doctor in psychology, kind of still do, but I also still want to be a filmmaker. If I got my doctorate's degree in psychology, it would be to help me make psychological thrillers. Not joking. That being said, I just wanted to share any knowledge I had with you. I'm so grateful for my 10-year career in finance. It's allowed me to kind of get an edge. I haven't always followed the information and advice that I used, but I definitely have learned from it. And I just want to share that with you. And if you have any questions once more, make sure to write it in the comments. But thank you again for joining this episode of The Power of Ambition. As always, stay ambitious, my friends. It is the number one way to building a life that you are proud of, that you love. What is it? What is being ambitious anyways? It's going after your goals. It's going after your dreams. And that's different for everyone. When I say stay ambitious, my friends, like it doesn't mean go buy a Ferrari or go make $1 million. It means be happy. If you want to go start a family, go start a family. If you be ambitious in your life in general, go after whatever it is that you want. When I initially wanted to start this podcast, I was reading a poem that I wrote called Above Mediocrity. It's one of my favorite poems that I've ever written. And I was thinking about calling the podcast Above Mediocrity, but something just didn't sit right with me with that title. But I was just thinking like, in order to be above mediocrity in any aspect of your life, whether that's family, professionally, business, love, like you need to be ambitious to rise above mediocrity. So I'm like, they kind of coincide, and it was really meaningful to me. So I want to end this podcast reading that poem to you. I don't have it memorized anymore. It's a poem that I wrote after the financial crash when I had to move back to El Sereno, my hometown, to get myself back together. And there were some things I saw in my neighborhood that I was disappointed by. And since I had moved out of my hometown, I had developed a different way of thinking. I had self-developed. I was reading books. I was learning new ways to live. And I think for the first time at 24 years old, I understood why some people get held back and why some people thrive. So this is sort of like a love letter to all of the people who have gotten stuck and don't know how to get ahead in life. This is for you. All with love. This poem is called Above Mediocrity. I don't know it by memory, so I'm going to be looking down occasionally. For those of you who are watching YouTube. For those of you who are listening to Spotify, I'm talking to the people on YouTube. Okay. It's a fight. It's a struggle. It's being the one that everyone comes to. It's being the hope and forgetting the pain and teaching everyone how to use the power of their brain. It's opening the unconscious eyes of the blind and making them realize that all they've learned has been lies. It's the stealing and the fighting and the cheating and the lying and the drugs and the drive-by. That's not the way of life. It's the freedom and your wealth. It's your loved one's health. No scrapping for quarters as a bus pulls up, but taking your keys from valet because you just came up. You see, here's the problem with mediocrity. The people are under an illusion. They've concluded that we don't control our future or the heights we reach. We need to lock away that false belief because all that's done is enslaved us and encaged us to poverty. Stop fighting. There's more than one piece of the pie. There's millions of them shits falling from the sky, and maybe you would notice if you weren't so high. Because you see, the real conspiracy is they got you to believe that there's a conspiracy, because whether there is one or not, don't you control your daily? Aren't you the governor of your mind? You're the one who's really blind to the power that you hold, blind to the fact that you are in control. Although admitting that would take blame off society and would force you to take full responsibility. So as you lay down in your bed tonight, I want you to think about what I just said. And I triple dog dare you to ask yourself, what decisions did you make that led you where you are today? Because your life is just an accumulation of decisions you've made on a daily. I'll say it again. Your life is just an accumulation of decisions that you've made on a daily. Your life is just an accumulation of decisions that you've made on a daily. I dare you to ask yourself. I dare you to be honest. And I dare you to take back your power. I dare you to be above mediocrity. Thank you for joining the Power of Ambition podcast with Nicole Serrato. I'll see you next week.